So, having gone through in that first chapter and looked at the conceptual framework, so those rules that underpin the preparation of all our accounting standards, we're now going to look at the regulatory framework. And the regulatory framework is beginning to look at who regulates, so who goes through and pulls together that framework, who goes through and prepares the accounting standards, and who oversees that process. So within your notes there, you've got that diagram. I don't think from a P2 perspective, you need to go through there and understand too much about it. You should understand most of it already from the days of F7. So know who the IFRS Interpretations Committee are and what they do, the IFRS Advisory Council, who they are and what they do. The IFRS Foundation, if you like, is, if you like, the overseeing body of it all, isn't it? And then you have the ISB. I think the focus here essentially is the ISB, the International Accounting Standards Board, who sit down in Cannon Street in the City of London. Because what we need to go through and do there is we need to look at the International Accounting Standards Boards who prepare and issue the IFRSs. And when it goes through there and looking at your IFRSs, we need to think about it from a current issues perspective, because that's how this regulatory framework, if you like, is examined. The way in which it is examined is that they will test you in your current issues on the new accounting standards that have been prepared, ready for issue at some point in the future. And what we've got to consider there is when we look at the new accounting standard under the current issue, in order to understand why there is a new accounting standard, we need to understand the actual development process that goes through and takes place. If we know the development process, so how the accounting standard is developed, we can then go through and understand the current issues that little bit better, because we can then understand the problems that we have with the current standard. So tying it back into chapter 1, which we had there, if you like, with your conceptual framework. And if we know the conceptual framework and the process of determining a new accounting standard, then we can go through and answer any current issues question reasonably well. And when we say reasonably well, all we're saying is that you'll be easily able to pass a current issues question no matter what the current issue is. Current issues is all about technique and application. It's not so much about specific knowledge of what is happening. Okay, it's more about a technique and an application of the principles and this development process. So if the IASB are looking to develop a new IFRS, what is the process? What happens? Well, first of all, there's what's referred to as an agenda consultation. So every year, the IASB put together what's known as a work plan. And that work plan will go through there and detail the accounting standards or areas of accounting standards that they are looking to try and develop and their reasoning behind that development. So it's there, if you like, first communication with the users and the preparers of the accounts as to what changes and why they are looking to go through there and make those changes. And what they will do is they will then go through and from that work plan, they will request public comments. They will request people to go through and put their, if you like, thoughts to that agenda consultation that they are looking to go through and develop. So what will go through and happen there is there will then be a discussion paper. Yeah, the discussion paper goes through and builds upon what is in the work plan and puts in the specifics about what the ISB currently believe is right and what they currently believe needs improving with regards to that particular accounting standard. So in recent history, we've gone through there and had, is it IFRS 15 to do now with revenue. We've got IFRS 16, which is to do with leases. And then previously was it IFRS 9 to go through there and deal with financial instruments. There's plenty of others in between, IFRS 10, 11, 12, 13. 13 you may have touched upon in terms of fair value. IFRS 10 goes through there and develops things with regards to control. But the discussion paper is, if you like, the first publication on that particular issue. The agenda consultation is essentially the work plan and just details the areas where the work wants to be done. The discussion paper, if you like, it is the first publication that is issued by the ISB with regards to the specific issues that they consider. Once we've gone through and got the discussion paper and we have had feedback on the discussion paper, we then issue what is referred to as an exposure draft. The exposure draft, if you like, is the draft accounting standard. So following the discussion paper and following the feedback that the ISB have got with the users and the preparers of the accounts, they put together what they think is the first, if you like, idea of what they think the accounting standard should look like. Again, once that is published, it's mandatory that there is an exposure draft. It's not so mandatory about the discussion paper. The exposure draft is mandatory, so that tends to be, as part of current issues, what you can get examined on. If you look at the syllabus in its current guise, it will list the exposure drafts that are examinable with regards to what your current issues question could be. Okay, and once the exposure draft is published, one of two things can happen. Firstly, it could be revised. People may not be too happy with the current exposure draft, which tends to be what happens. If we look at the leases project, it went on for 7 or 8 years. Yeah, that long. Similar with the revenue recognition project. Again, 7 to 8 years to taking it from when it was first implemented on the agenda and the work plan up until the final accounting standard being issued. There were several exposure drafts that kept on getting revised and updated based upon public comments, okay, how they then thought that it could be improved even further than what it had already been done. If we're happy with the exposure draft, even after it's been revised, we then have the new IFRS issued, okay, so it is there, it's in its final reported state. So we then have IFRS 15, we now have IFRS 16 to do with revenue and leases respectively. Once the IFRS is issued, it then has to be adopted. So we've even put back the adoption date for leases, and we've also put back the adoption date for revenue, because there's a lot that needs to go through and change. Okay, if you're adopting a new accounting standard, okay, it may be only so many pages within the manual that you need to change, but in terms of updating your systems, in terms of updating the knowledge of your employees, it takes a long time, and you want to allow business as long a time as possible to adopt that standard correctly, because we don't want the adoption of that standard to cause several issues, do we? Okay, if those issues are highlighted and become serious, then it falls back not on the business, but it falls back on the ISB, doesn't it? And it doesn't look then like they are giving sufficient time to adopt that new standard, and therefore that then doesn't enhance the credibility, does it? It reduces the credibility of the ISB. The ISB wants to maintain its credibility, so wants to give sufficient time for users of the account to be able to understand the accounting standard, and for businesses to be able to go through and adopt and apply that standard correctly. Once the IFRS has been adopted, there is also then a post-implementation review, just to ensure that things are progressing correctly and as intended in the standard and as what we expected from the exposure draft. If not, we can then go through and tweak the standard and update it. It does happen. It would be ideal it didn't happen and that everything was perfect, but again, it's ensuring that we enhance the credibility of the ISB, and that if we see that things can still be improved, we do go through and improve them. Okay, but key bit out of all that is, in terms of examinability, you're not asked to write out or explain the development process. If you want, by all means, and go through and do a further bit of research and investigation into the discussion paper, the exposure draft, etc. The focus is on the exposure draft. And remember, when we're looking at the exposure draft needs to ensure that it meets the principles from the conceptual framework. So like you saw in that earlier example, does it meet the definitions of the elements? Does it meet the recognition criteria? Is it measured correctly? Could it be improved to, if you like, enhance the enhancing qualitative characteristics, or to go through there and enhance further the other qualitative characteristics? Okay. And if so, then the exposure draft needs to demonstrate that that is what is going to be achieved. Okay. And I think the most important thing, and I haven't said it yet, is that when you're going through and looking at developing a new accounting standard, what you have there is it is always developed on a positional focus. So it goes through there and looks at things from the SFP perspective. So can you go through and get the asset or the liability figure right? Because if you get the asset and the liability figure right 1 year compared to the next, then the movement in that asset or liability can then either be taken to profit or loss or to other comprehensive income. So if you get things right from a positional focus, then the profit or loss and the other comprehensive income, that movement in the asset and the movement in the liability will then be correct as well. So every accounting standard that is developed on a positional focus. Okay, getting the assets, the liabilities correct. So if you can understand the conceptual framework, if you can understand the development process with particular focus on the exposure draft and what the ISB are trying to do to develop their accounting standards, then current issues questions, even though we cover them right at the end of the course, will be one of the easier bits that you go through and do within the exam. Okay, it doesn't matter what current issue they touch upon within the exam, you will have enough background knowledge and ideas on how to approach that question to easily be able to go through and pass. So as you go through and work the accounting standards, once we do that, after we've looked at group accounts later on, think about things and tie them back into the framework. Think about how that standard is actually developed on a positional focus, and think about newer accounting standards and see how they have been developed on a positional focus. One of which you've seen already in F7, which is very much position focused, even though it possibly shouldn't be, is deferred tax, isn't it? If you think about tax, the first thing you think about is profit or loss, isn't it? But if you think about how the accounting standard has now been developed, if you think about the steps to work out the deferred tax balance and the deferred tax movement, you look at the carrying value versus the tax base. And the carrying value is what you see on the SFP, isn't it? And the tax base is what you see on the tax authority's statement of financial position. So that accounting standard, even though we're looking to get the tax expense correct, looking at the current tax and the movement on deferred tax, to do that, it looks at it from an SFP perspective. And that's what every other accounting standard then goes through to do. Because if you get the SFP figure right, whether it's an asset or a liability, the movement is then correct, and that goes to profit or loss or other comprehensive income. Okay, so even though we haven't touched upon any numbers in these first few videos that we've gone through to look at, I'm just trying to get a point across to you how important to help you with that fourth and final current issues question is that if you consider what we've spoken about so far, you're not going to go too far wrong. Other than that, I'll go through there and call it a day on this chapter here, and I'll see you within the next chapter when we just go through there and briefly recap what the statement of financial position, statement of profit or loss and OCI, and statement of change in equity look like, so that then sets you up well to be able to go through there and answer the group's question within question 1 of the exam. We'll leave current issues and question 4 alone for the time being. We'll move upon to that right at the end of the syllabus, but please do give it some thought as you go through the videos. Other than that, I'll see you all within the next video. Bye for now.